Hi guys, today is Monday 19th January. I want us to do a quick review of a trade that I took early on. I was not able to put some voice as it was running. I was trying to multitask doing some other things. But I'm looking for smooth lows. So from 7 a.m. until 9:30, opening bell will be in a couple of minutes, in about 1 or 2 minutes. I was trying to look for where the market is smooth, and I found those lows, and there's a reason why I was interested in going short and not taking longs, not buying long. So where I have my limit order to take my profit, we have relative equal lows, the lows we had formed this morning. Then we pulled back into the range that we formed. So when we opened on Sunday, the new week opening up, we gapped lower. So this is why ICT has been telling us to respect gap risk. Don't hold trades in the current market conditions over the weekend, because it really gapped lower and it's been moving lower in London. So there was a pullback after 5 moving into the 7 a.m. hour. So above us, you can see we've swept some buy side, then displaced lower. So that's why I'm interested in going short. So, and I'm anticipating the opening bell at 9:30 to facilitate the movement. So we'll have some volatility injection to take us lower. So that is what was going on in my mind as I was entering this trade, or rather that's the reason why I took this trade. So you see I'm marking a fair value gap there. Price so far has respected it. There's not even a week visiting the upper quadrant, the upper half of that fair value gap, which is a CB. And that is good because it tells you order flow is bearish. So just positioned ahead of the opening bell, aiming for an obvious level of liquidity, sell side, and risk is defined. Candle number 1 that forms this CB that we've just noted, my stop is just above that, above the high of that candlestick number 1. Remember, a fair value gap is formed by 3 candles, so my stop loss is above candle number 1 that constitutes that inefficiency. So after sweeping the buy side there, you remember last year ICT taught us another PD array called the ICT Venom. It's a model that he introduced to us. So the candlestick moving up to take buy side has an inefficiency. Then it only spent one candle above, then quickly displaced, forming another inefficiency. So that is Venom, and you can see immediately after that we just displaced and continued moving lower. So I don't expect price to revisit that fair value gap at the top at all. That's why I have my fair value gap there. So those are all the things that were going on in my mind. These are the things I saw. That's the reason why I took this trade. That's the sell side is there. So you can see my limit order is slightly above it, because you have to consider the spread that you need to take you out of the trade, or rather to have your fill. So you can see the vertical line denoting the 930 candle. And you can see even the 930 candle could not trade to the inefficiency, the CB, sell side imbalance, buy side inefficiency. So that tells you it's bearish. So when I saw that, I was confident, I was a bit comfortable, not moving my stop, just letting it run, because I'm not aiming for a very big range. This is a bread and butter setup. And here I was watching where we formed the first presented fair value gap. Not as volatile. Opening bell is usually volatile. Today it was not as, so that's the sell side I was aiming for. You can see those are relative equal lows. So that was the target I was aiming for. And you can see my field getting engaged there. So I'll see you in the next one.